Good morning, everyone, and welcome to the Jacobs Levy Equity Management Center for Quantitative Financial Research Spring Forum for the year 2016. I'm Chris Gatesy, Academic Director for the Jacobs Levy Center, and it's my pleasure to host today's event. The center's mission, as I also hope and trust you know, is to leverage the research strengths of the Wharton School and those in our constellation to increase understanding, or as we might say, move the needle over the theoretical and practical aspects of quantitative finance. Today's presenters and award recipient have made a strong contribution to this field through their research, and we look forward to learning from not only from them, but from each of you throughout the day and through our conversations. The Jacobs Levy Center and the Wharton Jacobs Levy Prize for Quantitative Financial Innovation were established in 2011 through generous gifts from Bruce Jacobs and Ken Levy, our benefactors. Quantitative finance provides a remarkable tool to the investment industry that, when harnessed and appropriately applied, has the potential to generate tremendous value. The Wharton School intends to stay at the forefront of research and scholarship in this important field. On that note today, we will hear presentations and discussions of outstanding papers chosen from dozens and dozens of submissions, as well as a panel of industry luminaries focusing on topics resting in the nexus of the academy and the practice of quantitative finance. In addition, I would like to welcome the 2016 recipient of the Wharton Jacobs Levy Prize for Quantitative Financial Innovation, William Sharpe, Professor of Finance Emeritus at the Stanford University Graduate School of Business. I saw Bill. I don't know if Bill, thank you so much for being here. As I'm sure everyone agrees, it's impossible to engage with the theory or the practice of quantitative finance without a fundamental understanding of Bill Sharpe's work and influence, and we're grateful today for your presence. Now may I introduce the chair of the Jacobs Levy Center Advisory Board, who's also principal and co-founder of Jacobs Levy Equity Management, Bruce Jacobs.
Thank you, Chris. Good morning, and welcome to the 2016 Spring Forum of the Jacobs Levy Equity Management Center for Quantitative Financial Research. Ken Levy and I established the center in 2011 in honor of our firm's 25th anniversary in order to spur idea creation and innovation, having a real impact on the practice of finance in the investment community. When Ken and I started our firm 30 years ago, terms such as alpha and beta, as applied to investing, were rather esoteric and mostly confined to an emerging discipline known as quantitative finance. Today, you don't have to be a quant to know the difference between alpha and beta, or to have an opinion about whether one or the other is smart or dumb, active or passive, or something in between. That is a good thing, I think, and an indication of the degree to which quantitative finance has made its way into the mainstream of modern investing. Our exceptional lineup of speakers today will demonstrate not only an ongoing power and relevance of some of the bedrock concepts of quantitative finance, but also their ability to evolve and adapt in the face of a relentlessly changing market. First, John Garrard of McKinley Capital Management will discuss the benefits of robust regression techniques and Markowitz mean variance optimization. His research reveals that these techniques, combined with data mining correction tests, can produce portfolios that generate excess returns in global equity markets. Next, Sam Hartzmark of the University of Chicago Booth School of Business will present some research focus from the discipline of behavioral finance, which continues to influence the practice of quantitative finance and indeed all of finance. He will show that even sophisticated investors can fall victim to what behavioral theorists call cognitive errors. His research examines the effect on security prices of contrast effects, the tendency of investors to be more impressed with today's earnings surprises if yesterday's earnings surprises were negative, and less impressed if yesterday's earnings surprises were positive. Closing out the morning Joseph Gerakos, also from the Booth School, will present research that touches on the ongoing debate about the viability of active and passive management. He uses the SHARP style methodology to analyze the performance of active institutional investors and finds that the average manager generated a positive net alpha relative to benchmark, in part by dynamically rotating on factor exposures. This afternoon, we'll wade further into the active versus passive debate with what we expect will be a provocative panel discussion on smart beta strategies, featuring Chris Brightman of Research Affiliates, Ron Kahn of BlackRock, and Rob Shapiro of State Street Global Advisors. Watch out for the crossfire. Following the panel discussion, Ken and I will have the honor of presenting the biennial Wharton Jacobs Levy Prize for Quantitative Financial Innovation to one of the giants of finance, Bill Sharpe. Bill is being honored for his work on returns-based style analysis, research that remains very relevant today. Some 30 years later, we very much look forward to hearing his remarks. The purpose of the Jacobs Levy Center Forum is to shine a spotlight on and encourage debate about some of the key issues in investing in today's market. As you can surmise from our agenda, this is exactly what you will experience today. Ken and I look forward to meeting as many of you as we can. And now I'll turn it back over to Chris, who will introduce today's first speaker. Thank you.
Thank you, Bruce, and thanks to you and to Ken for your generous support of the efforts that have led to this conference and to the prize. We hope to continue to support the research of our faculty members and students to broaden the plenum that we have established in which academic and industry researchers in quantitative finance, our students, practitioners, asset owners, consultants, managers, regulators, and stakeholders can share their work and questions. Toward that end, we've attempted to engineer among our sessions today an offering of just such a set, just a mix of rigorous academic research, pointed discourse, and commentary and reflection from industry on the timely topics on the docket today.